What's up, guys? In today's video, we are going to talk about the last 30 years of the real estate mortgage market and what that means to you and all these people seesawing on whether you should buy now or wait for the crash, if it's going to even happen. Stay tuned, because that's what Neil and I are going to talk about next. Guys, it is Ryan
and Neil,
and we want to talk about a fun topic that everybody loves to go back and forth. People are seesawing on.
Fun.
In fact, a year ago, even Neil and I had a different opinion than what we have today, and that is about the value of houses, where they are, where they're going, and this whole market. Is there a bubble or a crash that's bound to happen or not? Are things different from 2006, 2007? And you would know this better than many, because you've lived through many of these different storms. So what are your thoughts based on the current markets and based on what we've seen houses do over the last 30 years?
Well, here's the thing. If you asked me a year ago, I would have a totally different answer. But there is no houses out there. Nobody's getting foreclosed on. Everybody thought that the pandemic, people were going to lose their houses. No, they all have equity. People that are, if they want to sell them, they can sell them for more than they paid for them. And there's so many people that don't want to live where they're living. They can work from home now. So you have people moving to different areas that are cheaper. So you have way more differences than what happened in 2007 and 2007-8. Right now, even if rates go up, there is not going to be a crash, because there's always people buying. And if you don't buy it, the investors are buying it. And the giant corporations are buying up houses and they're renting them out. So right now is...
It's tough. We know it's
the best time in the world to buy a house, because if you wait longer, the prices are going even crazy. And if you don't believe us, look at this graph.
This is what's really cool, guys. Because I'm having these conversations with multiple forums or like Facebook groups and stuff like that. One of the things that I learned is people are talking about the millennials now are at the age of buying a house. Do you know how many millennials right now are at the age of buying a house, or how many American millennials? 70.1 or 70.2 million people. 70.1 or 70.2 million people in the United States today are millennials that are now entering the ages when they would typically buy a house. 70 million. That's a lot. Come to think of it, it's 6.8 according to the National Association of Realtors. There's a $6.8 million housing shortage today, currently.
That's why we're not going to have a bubble.
You just said there was a property that went for sale that I had seen on my news feed. It was for sale for $1.3 million.
The guy put it up for $1.3 million in North Jersey. It just happened a month ago, and he got $9 million cash.
Yep. And I just had a buyer yesterday. He's been pre-approved. He actually bought a house with us 3 years ago. Now wants to buy his dream house. He put an offer. By the time the best and final offer was due
at 11 o'clock yesterday morning.
11 o'clock yesterday morning, and had already sold $40,000 over asking price. That's the market we're in right now. Does that mean it's going to continue? No, it doesn't mean the sky is falling. But what it does mean is this. If you look back 30 years ago, your point of entry was somewhere right around $120,000. That was the average or the median price for houses back 30 years ago. Those prices today, looking at the price, now this includes the 2007 collapse, the average price today is a little over $400,000.
And I think that's way off. Honestly, I think
that's what I got from HUD, but
I think it's way off.
Now tell them why you think that, though.
Well, because I used to live in a neighborhood before I bought this house, and that's what, back in 1992, it was a single. There were about 2,800 square feet, split level. It's not far from here.
Nice houses.
Right, and they were about 120, 140 back then. There were 600 right now, so that's why I really think he's off.
And that's okay. But this is, again, I got this information you can check. I posted the stats and the graphs for it. So, but the difference, guys, or what you want to realize is this: while prices are going up, interest rates are also going up, and everybody thinks there's going to be all these foreclosures. There's not going to be nearly as many foreclosures, because the banks don't want to deal with the messes of inventory that they had to before, where they had to deal with them. They're in the banking business. They don't want to be in the real estate business.
Nobody's buying a house that can't afford it now. So that's a big, big difference.
Yeah. So now what they're doing is they're offering people that had houses that are running into financial problems, they're now extending and offering 40-year mortgages so that they can help to afford that house and stay in that house. So now they don't have all these houses they have to get rid of. And if you look at the value of houses, guys, let's even conceptually say, if this is typically the value based off of what this line was doing over the course of time, as you're paying down the debt, this is your equity, okay? But let's just conceptually say, let's say things do cool off because of the rising interest rates, and instead, your equity line is a lot lower. Guess what? You're still gaining equity.
Because you're paying down the debt.
If you're renting, you are paying nothing.
Nothing.
You're getting nothing. Zero
And
value.
I guarantee your rent's going to go up as soon as your lease is up, because the landlords have to make back all the money they lost, plus things are costing more. So they don't sell that house. They're looking and saying, wow, this house is worth more, so that means I can charge more in rent. And if you look at people going out to rent right now, there might be 20, 30 people as soon as you put a house up for rent. So it's the same thing, and it ends up costing you more because you gain nothing. You don't have a tax deduction. You have nothing. You are making your landlord rich.
I read an article, and again, part of these real estate forums, they were saying the average 2-bedroom apartment, some of them having 2 baths, the rents are going between $1,900 and $2,300.
And they charge more for an animal.
Yeah, they charge more for animals, some, whatever the smoking thing is anymore. But the reality is this, guys, at $2,300, you could probably buy your own house.
A nice house.
In fact, a buddy of mine who lives in a twin, he wants to buy the twin next door because his mom owns that one. He wants to buy the twin next door. The payment was just over $2,000 a month, putting 3.5% down. So think about it, guys. Just make yourselves aware, because here's what's going to happen. Even if the pricing of or the value of houses slowly kind of comes back a little bit, it's not going to crash because there's too many people still trying to buy them.
Also, stop worrying about rate. Worry about, can I afford it? That's it. When you get out of your room where you can't afford it, that's different. Then you're going to have to buy a cheaper house. Don't worry about the rate. Nobody stays in that mortgage that long. You can always refi. 2-3 years from now, rates are going to come back down. I don't know where, but if I did, I wouldn't be sitting here. I'd be a billionaire.
The other funny thing is, guys, we deal with a lot of these investors. And it was last week when my eyes were really open to it, when we were opening up a loan for a guy. And I'm like, man, hasn't that guy already bought a couple properties? And he's an investor. And what happened was, he and his buddy now, they are racing to see how many houses they can get and how quickly. And they don't care about the price of the house. They don't even care about the interest rate, because what are they doing? They're passing all that cost down to who?
To the consumer, the renter. I said something to him when he was buying this house. I said, this becomes like a drug. It's like getting one tattoo. It's like one tattoo and you want another one. And he laughs every time he calls me. He says, Neil, I need another tattoo. That's true.
You didn't even tell me. Here's the funny part. I didn't tell Neil, the guy that I'm thinking of. He just knows who I'm talking about. And that's what's funny, is we know this guy and now his friend, they're literally high-fiving and competing with each other, buying up
See how many
properties.
they can buy.
And
I told him he could buy
single-family.
residential, he could buy up to 20 houses.
And they're all single-family houses that they're buying. So the same houses that a lot of people like you are looking at buying yourself, this investor guy, he's taking the cash from his last purchase and he's rolling that to pay for the down payment for his new purchase. Meanwhile, people on the sidelines are like, I'm just going to wait. I'm just going to wait. This guy's buying up the real estate. And if you look, it's happening in Canada as well, because there's a lot of investors that they're just buying up all the properties. And people are sitting on the sidelines. Why? Because they're not educated enough to understand history. And this is what we're trying to do. We're trying to help educate people on the history of the market, on the current conditions of the market. Yes, nobody knows what's going to happen tomorrow, but this is not like 2006, 2007. So if somebody's trying to tell you that this is what's going to happen, please don't listen to them, because this situation is completely different. It's not to say things can't correct or change a little bit, but with interest rates continuing to rise, I can tell you right now, this is not the same situation you had before. If these prices continue to go up and interest rates continue to skyrocket, they've almost doubled since January of this year, that's a huge difference in your buying power. We have people that have lost $150,000 worth of buying power to keep the same payment. Their house dropped $150,000 in what they can shop for because of interest rates going up. to keep that same payment. All right, remember, as interest rates go up, your buying power goes down. That's an awkward, ugly seesaw, so please be aware of that. All right, anything else we should add?
Nope.
You guys have an awesome day. If you have questions, let us know. If you're thinking about qualifying, give us a call. It doesn't matter if you qualify today or not. We'll tell you where you stand and what you need to do so you can qualify.
And we won't pull your credit.
Yep.
Don't worry.
Give us a call. We'll help you out. Take care.